Greetings, beloveds. This is the weekend market analysis video for the weekend of February 22nd and 23rd, 2025. But first, I greet you in the love light of the one infinite creator. All right, so with about 40 minutes to go before the end of Friday's session, which is at options expiration week, we are seeing US markets down anywhere from 1 to 2%. And we can see as of right now, also we can see BTC, which was higher on Friday, is trading down about 3%, almost close to session lows. All right, let's go and take a look at the summary for the week. And for the week, we can see down weeks here, a reversal week for markets down. And we can see the Dow is down the most, about 2.55, NASDAQ 2.44 down, S&P 500 1.6, and we can see that the BTC is down about 1% for the week. Let's take a look at those charts. Let's begin with the NASDAQ hourly and just show you how we got to where we are trading right now. Of course, we're seeing a big drop Friday there. We can see that this is consistent with this topside line that I had been discussing. And so we were unable to clear this line this week. And of course, that became resistance. And so we've been down since then. That's one way of looking at it. The other way is to figure out, based on the Mother uniformity concept, where we break down, which is somewhere here, and then draw a line as such. And you can see that this also gives us some indication that this was coming off the highs there, turned into areas of resistance, and we went above it and then back below it for this rejection point. And then we can see here we were also rejected here in the last week or so. So on the hourly, we can see where the market was showing signs of resistance, and we're getting this pullback. Now the question obviously becomes, what does this mean? Is this the beginning of a bear market? I'll answer that question immediately at the beginning of this video. The way the charts are forming, yes, it could end up being a bear market or the beginning of a serious bear market, but some things have to play out before we can call that. So we can see here, for example, on the hourly for the NASDAQ, RSI setting of 26, by the way, is we have this situation where we have the top side resistance, and now we are coming to test the bottom side of this RSI lows line. Are we going to hold? Well, if we hold, then this is just a normal pullback. If we hold here, then it means that we might start building to the upside as we begin the new week. We shall see. That's one way of looking at it. The other way is to understand that since the lows of August, so the lows of August here, this is the hourly again, RSI setting of 26. What I want to show you is that around the 38.2 level, so I'm going to draw it somewhere there. That's the RSI level, roughly around 38.2. If we can figure out that coming off the lows of August here, this is where the RSI clears this level and we start building. Of course, we haven't been back to these levels. Market's been essentially higher since then. Now we can take that information and you'll notice that this 38.2 level, whenever the market tests it and starts moving back above this level, and I'll just show you some of the areas, this is where the market has been rebounding. So even here, all of these levels happened around 38.2 on the hourly for the NASDAQ. And so here we are again, the question being, is it going to hold again this time? Now, to understand what the market is doing, we have to go to the dailies, and let's begin with the Dow daily. And the Dow daily yesterday had a big down day, relatively speaking, compared to the NASDAQ and S&P 500, is because you can see the Dow daily yesterday moved its RSI below 50, which means a big down day. And today we are seeing the NASDAQ also moving its RSI below 50, hence the introduction of a big down day. And we can see the same thing also with the S&P 500, which means that the likelihood of an intraday bounce is minimal, if any. So again, S&P 500 slashing RSI 50, hence we have that big down day. So what that generally means, you tend to close towards session lows. Now, it also means that now we should be open to the possibility of the S&P 500 reclaiming RSI 50 with a big up move. Same thing with the NASDAQ. It could have a reversal day where it recaptures RSI 50 and has a big up day. Also keep in mind that we are seeing the NASDAQ effectively testing its 50-day moving average, and the S&P 500 is also effectively at the moment testing its 50-day moving average. So obviously we know that the more we trade below those moving averages, the more it's going to spook traders and the institutions, and the more these markets are going to pull back. At the same time, if we can hold this general area, not necessarily precisely here, but if we can hold the general area around RSI 50, then the market should net be stable in the coming days and weeks. Now, using the S&P 500, because we have similar looking charts on the dailies here, S&P 500 is right now showing a materially breached breakout attempt. So this is what we call a failed breakout. There's no ifs and buts about it. We tried to break out here in late January. We were rejected. Tried again here. Tried again here in the last couple of days. We were rejected. That's a failed breakout. And more importantly, one thing I've been observing for paid clients in the last couple of weeks is we've been making this push to higher daily highs, but you'll notice your RSI has been making lower and lower levels. And I talked about this high and this high coming with the RSI being rejected below 61.8. So in my opinion, in my research, that's the strongest type of divergence. And so in a sense, this movement lower is consistent with the RSI showing divergence. Now, just like we saw with the NASDAQ on the hourly, the S&P 500 on the daily, also we have this line here, which we haven't broken below, just as we have not broken above this topside line. So we could be in a market that effectively is searching for a future. As long as we are banging heads here, we don't know where we are going. But ultimately, either we get a market that breaks down here, which is going to invite even bigger selling for the SPX, or we get a market that ultimately over time, after digesting this pullback, breaks out and we start a new climb to all-time highs. And of course, that is the big question. Of course, it goes without saying that on the weekly charts, we have failed breakouts. This is the NASDAQ weekly, so let's go through this quickly. This is a failed breakout on the NASDAQ. That's not what the bulls wanted to see, not good. Also couple that with this RSI rejection, so the top side resistance. But keep in mind on the NASDAQ, we have this bottom side support that we haven't broken below. So we are wedging here. Again, this is just a market, in my opinion, that looks like it's broken, but could also find support here on the weekly and eventually clear this line. If this is going to be a true beginning of a bear market, we would have to break this weekly support line on the NASDAQ. Now, I might have to skip the S&P 500 because pretty much we have the same thing here. We have failed breakouts or failed breakout attempt on the weekly for the SPX. We have this declining RSI line that I've been discussing in the last couple of weeks. In fact, it was getting more obvious that this is where the rejection was taking place on the S&P 500. But having said that, we haven't broken down. We would need to break this RSI lows line before we can call this a broken market. So we haven't broken the charts yet, but it's something to be on the lookout for. We can see the Dow on the weekly also has left itself in its wake a failed series of breakout attempts about 3 weeks ago. We failed here. Now we are coiling down. Not the best look, definitely. And also I've been talking about this line here turning into uniformity resistance. And so the Dow pulling back is consistent with some of these things we've been observing. And also now keep in mind that if we end up having a week where we drop below RSI 50, expect a big down week whenever that happens. Now the monthlies, and these are probably the most important charts. The Dow monthly also showing a failed breakout attempt. Okay, that's obviously we can see here. But I think the charts that are more telling are the charts for the NASDAQ. Let's go to the SPX on the monthly, S&P monthly. So we can see as of right now, if we take this week monthly closing high, and the precise numbers are going to be in the description of the video. So we can see right now S&P 500, this breakout is starting to turn down, but the key is the RSI on the monthly continues holding above 69.1. So as long as SPX is holding its monthly RSI above 69.1, then this is a garden variety pullback, and we should be back to new highs in no time. Now, same thing can also be said with the NASDAQ. The NASDAQ monthly even with this pullback, continues to have its RSI well above 69.1 in the mid 70s. So this is still a strong market. In fact, it could be desirable for the bulls to have 1 month of rest for the Nasdaq, so it can have a future rested breakout. So 1 month of rest, in fact, could be very much what the bulls want to see, and so that in the future months we can stage a fresh breakout. The last fresh breakout by the Nasdaq was about 4 months ago. So the last fresh breakout after a rest period was here. And so we've had 1, 2, 3. So a rest month is desirable by bulls at the very least. So I would watch the S&P 500 and the Nasdaq monthly to see whether this market continues to be a market that is concealing the fact that it remains bullish. Now, some of the stocks that have been doing well, for example, this stock has been on fire for paid clients. And so the question now becomes, if this market turns bearish, then I'm going to have to be giving you less and less breakout attempts. But this stock has been acting very well. Of course, we see now with the market pulling back, some of these stocks that have been leadership might start being also seeing a down move. I apologize for that. That was UPS Delivery. But we can see here, there's a possibility that this has been leadership and could continue being leadership, but needs a rest period. Let me show you another stock. And the reason why I'm talking about this is just to show you that some of these stocks might have to reset before we can get another set of fresh breakouts. So here's another recent breakout alert that is still holding up very well in my opinion. So that one was sent to clients here in the last couple of weeks. And then there's one more which I noticed today is moving lower, RDW. This is a weekly chart, down of course with the market, so it's going to have to reset before I can issue a fresh breakout. But this has been a superb performer. The initial breakout alert here to clients was in September of last year. So the breakout alert came here and the stock went from around 7 all the way to about 27 in a couple of 1, 2, 3 in about 4 months. So some of these stocks might have to reset before we can go back to playing these stocks and others that are still in my watch list. So be on the lookout. If the market finds support, then of course we continue recommending breakout alerts. Now the home builders by way of the XHB, we can see here, this is definitely looking like, looks like if you're, a technical analyst, you can see this and you have to suspect that there's lower prices to come here. This is breaking down. And so obviously it's a red flag, but I'm not sure we should, by the way, before I talk about what I think is, just take a look at the power of understanding failed breakouts. Of course, this is hindsight work, but it's good to always understand that whenever you see a market show you that it has no intention of going higher, like here, a failed breakout, it's giving you some information. And also notice that when we come back and break these lows here, so the lows of the base, once we break that, that's also another indication. Watch out that things are not looking very stable. And so this recent drop in the home builders ETF, XHB, makes sense. So also, it's consistent with why we should understand that the US markets, the general markets, the more they are unable to show a breakout, the more we should start suspecting this market could change dynamics and start heading lower. Also, take note here, just from an educational standpoint, we made improvement in prices throughout this period, but your RSI kept making lower and lower lows. And that negative divergence has set the stage for this recent reversal lower. Now, okay, so now we've come down. What can we conclude from this? In my opinion, we should not assume that this can't find support. We can see if we go to the lows of October of 2023 right here. So this is based on my uniformity concept. So let me change something here. So there's a line here, so a line there, and then there's also this is where we come off the lows. So you'll notice that we've already found support before here, which is this period. If we end up bouncing on this line, then my thinking here is this finds support. If it finds support, then the next meaningful direction is actually for it to move higher. In fact, if you take a look at, let's go back about 5 years. I want to show you what I was looking at when I was looking at this earlier. So yes, on the surface looks broken, But on this 5-year weekly chart, going back to the lows of, this is 2020 here. If I take these weekly lows and extend them out like a search, you can see that it is this area where we would anticipate support, and then bring back this area here. In fact, we can even draw a line from here. And so this also happens to capture the lows from all the way, this reversal here of these lows. So this is where it's been finding support. So I would not be very quick to say that this is where we have to turn bearish, because we've been finding support on these two lines. And so it would not surprise me going into the next couple of weeks, we look back and see that this actually ended up finding support here, and that this was a fake out, options expiration fake out, before a recovery move that might take weeks and months. But definitely this is not leadership in the market. So we're not looking for breakout ideas in this home building sector. Semiconductors seeing a big down day. Just want to bring this up. And again, this is consistent with moving below RSI 50. So let's be on the lookout for possible recovery back above RSI 50, which is going to mean a big up day. That is going to be a big up day with a high likelihood of closing towards session highs. The last time we had a big down day below RSI was another move below RSI 50, which was this big gap down day here. Oh, by the way, I should also point out here, even though I know the video is getting a little bit too lengthy, but I want to point out something quickly here. I already touched on this, but sometimes we just have to go back to the basics. You got this top side resistance line. If we do it this way, that was rejection area. We also have the possibility of bottom side support. So we haven't broken down as far as the semiconductors are concerned. Take a look at the weekly. And the weekly here, we can see again, effectively, we can say we've been in this range. On a weekly closing basis, we've been closing in that range, going back to many months. In fact, going back to middle of last year. So nothing has really changed. And we can see top side resistance, which also means the possibility of a breakout above this line. And let me bring back, let's take a look. This is the weekly. On the monthly, by the way, we still have, take a look at the monthly closing levels. Monthly closing levels. They've all been in this range. Very tight base. We are still holding above RSI 69.1. So believe it or not, semiconductors still look great. And I would not be surprised that we get another opportunity to break out. And it's a breakout that we need to pay attention to, because if we can break out, again, semiconductors are going to reclaim leadership, because the RSI has held on above 69.1 all the way back to the beginning of 2024. So more than a year ago, RSI has been above 69.1. Let's take a look at the financials. XLF is the monthly chart we want to look at here, and we can see that the price breakout is under threat of failing, if not at the moment is failing. But the RSI continues to hold, albeit slightly, but RSI is still above 69.1. So not the biggest sell signal as of right now, as far as the XLF is concerned. I take a look at the VT, which tracks global markets as a group. We can see the VT. Also, we have this. The price breakout is still intact. Again, just by small amounts. It's not the biggest breakout ever, but we're still holding above the prior monthly closing high, going back to, I believe, October. So since October or November monthly closing highs, we're still above that level. But your RSI is struggling to hold above 69.1. So not the worst, but could be something developing here. And quickly take a look at the weekly here. We can see the weekly looks similar to what we've seen with US markets, in that we had this improvement in price levels, but that has come with declining RSI strength. But we have yet to break down, because our breakdown is going to need a break of this RSI lows line. So this might take weeks to play out before we can get a definite get out of the market sell signal. Now this is the GLD chart, of course, tracking the gold index. Now notice the difference here on where it's trading at the top right of its weekly chart. And I've been saying that the mining stocks haven't been looking great. Take a look at the GDX, which tracks mining stocks, and you can see they haven't even broken out. And in fact, we see this pullback this week. So definitely not in the leadership Take a look at silver by way of XLF, SLV. Again, it's not trading at, hasn't broken out like gold did a couple weeks ago, and we are struggling here. So definitely not in the leadership. So I go back to saying that what we are seeing here is effectively that GLD and the gold index by itself, just the gold index, not the mining stocks, is where the action to the upside is. In fact, we've been talking, in fact, we were able to capture this breakout. Hasn't moved much, but still a good, you're still not losing money here. So the breakout took place, which I sent you that breakout alert right here. And the reason why, of course, is I've been talking about the power of the gold monthly chart as the monthly RSI continues to hold above 69.1. It is definitely the index itself, not the mining stocks. The index is where the bullish momentum is and has been for, in fact, going back to mid last year. So playing the miners has been frustrating and should continue being frustrating because the action is actually in the gold index itself. Taking a look at crude oil, and I'm going to use the charts for USO going back a couple of weeks. Of course, we came back to this area after what was a V-type. We had this snapback move here after this big drop. And of course, we ran into troubles in an area where we had stalled before. We had stalled here, and we stalled again here. So not surprising. Also on the weekly chart here, I've been talking about this topside line as having been where it's been struggling here, topside line. So this is not in the leadership in the market is my point. Take a look at the monthly chart. You can see the monthly for USO also has this topside resistance on the monthly. So for energy names and especially for crude oil itself to move higher, then in the coming months, it has to clear this topside line. Otherwise, net, this is continuing to be sideways to lower as far as crude oil is concerned. But also, if you take a look at this monthly chart, we've been trading in this range, going back almost 1.5 years plus. So really, we are still in this range, not breaking out or breaking down. Which brings me now to BTC. Let's take a look at BTC. We're going to begin here with the, let's take a look at the, begin with the weekly chart. So BTC, now we can see that it's moving farther and farther away from its weekly breakout, which of course failed. So we had a couple weekly attempts to break out here. Those failed, not good. Now we can take a look at what this means. So we are not really, we haven't broken below these lows here. There's a weekly close and low there, the lows of the base. We haven't broken below it. So I would say if that breaks, that opens the possibility for even another big drop. So right now, we are still in this bracket. We haven't broken down, and we have recently failed to break out here, So not necessarily broken, but something that could develop into a break situation. Take a look at a 5-year weekly here. And I've been proposing the following line, which is this line here, the prior lows line. And I've been saying that as long as we're above this line, then this could still be setting up to break out. We look like we're starting to break this line here. That's not what the bulls wanted to see or to hear. Now, I have to say that we also have to consider the following. We know that this movement here, can even take this movement here, was instrumental in bringing BTC to this big spike here. So we can take that information and draw our uniformity line from here. So we can draw it from here. So this could also be a logical area for eventual support. Now, don't forget that the ultimate line for a big breakdown, if it happens, is a break of this line would have to take place down the road. BTC would have to break this line before we can call this a broken crypto market. So there's a lot that the bears would have to do before they break down this market. Now, taking a look at the daily for BTC. So I'm going to draw two lines, something we've been seeing as a theme. We got this topside resistance line, which we can see here in the last day also turned into rejection area here. We're also trading below that declining 50-day moving average. So really no momentum here as of right now. But at the same time, we have yet to break down, is my point, because this RSI Lows line on the daily has yet to break down. So for there to be another big downtrend, we have to trade below this line here. For there to be another big spike spanning weeks and months, then the cryptos would have to clear the top side line, would have to eventually clear this line, so we can be trading back to new highs, if not record improved highs. In other words, we are in this wedging situation, and we are either going to get a breakout or a breakdown in the coming days. Now, taking a look at the monthly. Let's take a look at monthly for BTC. Let's go back about all data here that I have. So you can see that BTC effectively is still holding its RSI above 69.1. It's about to break, but it's still holding. So that's key. Remember, if you're new to this, this is a sweet spot. When BTC is above 69.1, happens to be where big spikes take place. Big spikes take place. So, and also at the same time, it's where we get big reversals lower. So let's just pay attention here, because if we end up seeing BTC breaking back below 69.1, we know that that tends to be a reversal area for BTC. So whatever happens here above 69.1, we might have a reason to continue sideways to high in the coming months. But if we break below 69.1, we need to entertain the possibility of a big down couple of months for BTC. So with a few seconds before the end of this Friday session, this options expiration week, remember, as we are dropping below RSI 50, we can see here, as we are dropping below RSI 50 on the day, we are going to get the market closing towards session lows, which is exactly what just happened there. So yes, we got a big down week. What it means for the market in the coming days, coming weeks, coming months, we are going to find out as the charts develop. So follow along week to week as I give you my weekend analysis. That's it for now. I leave you as I found you, in the love and in the light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator. Adonai.